Muy buenas y bienvenidos a Negocios Televisión. Tenemos hoy con nosotros a Scott DiMaggio, jefe de Renta Fija en Alliancebrestrain. Good afternoon.
Good afternoon.
I would like to ask you, Scott, what is the Alliancebrestrain's outlook for the Federal Reserve? We just saw the decision, the latest decision that it made last week. What's the interest rate path over the next 6 to 12 months?
Right, thank you. Thanks for having me today. So the Fed did cut rates last week, right after about a year of keeping them on hold. We felt for this entire year that the Fed should cut rates 3 times. So we're still expecting 2 more rate reductions this year. And over the course of the next 6 to 12 months, the Fed has told us their neutral rate is between 3 and 3.25. So we should expect a few more rate cuts next year to move that policy rate from this 4% level closer to a 3% level.
Mm-hmm. And how is Alliancebrestrain positioning in its portfolios in the current monetary policy environment nowadays?
Yeah, Fed rate reductions are good for a lot of parts of fixed income, and we want to take advantage of that. So first, we think clients should have duration, right? Duration in the 5-year part of the curve makes a lot of sense. You don't want to be in cash because that cash rate goes lower and lower every time the central bank reduces interest rates. So we suggest clients have duration. And we think credit is a bit expensive, but there are still plenty of opportunities, plenty of good security selection out there. So clients should be looking for yield. And an environment where the central banks are cutting rates, an environment where growth is slowing, and inflation is moving towards target, this tends to be a pretty good environment for most parts of fixed income. So we think clients should get exposure and get a little bit more duration, a little bit more yield in their portfolios.
And Scott, in the U.S. market context, where do you currently see the most value? In treasuries, investment grade credit, or high yield?
Yeah, both investment grade and high yield are still attractive. I think their spreads are a little tight to history. And so we should expect to see some weakening, but I think any weakening does get bought by foreign investors. This is an environment for fixed income, so we don't think clients should be afraid of credit. Any backup in yields, any backup in spreads, we think are a buying opportunity. We're trying to be very active, right, in this environment and suggest clients do get invested.
Right. And moving now to Europe, what is Alliancebrestrain's view on the European fixed income market compared to the U.S., given that the ECB, as we just noticed, is also facing inflation pressures and within a different macroeconomic context?
Right, so inflation did tick up a little bit in some of the euro indicators. We still think the European economy is a little bit on the weaker side. So we would expect the ECB over the next couple of months to reduce interest rates one more time. The European economy should do a little bit better as we go into next year, as we get some of the German fiscal stimulus around defense, around infrastructure, which should help keep the European economy out of a recession. So again, it's another kind of market where, as you get a move higher in yields, we think that is a buying opportunity, and we think credit, again, despite tight valuations, do offer additional yield, and it is a place that clients should be looking to deploy more capital.
And Scott, given the rising geopolitical tensions right now and a more uncertain global growth outlook, how is Alliancebrestrain managing exposure to emerging markets and international sovereignty being debt with its portfolio nowadays?
Yeah, we think this is a good environment for emerging markets. So again, we go back to the Fed cutting rates, tends to be a little bit of a weaker dollar environment. U.S. growth is not collapsing, but it's slowing. So we think there are a lot of there's a lot of macro tailwinds to help emerging markets. We think emerging market corporates are especially undervalued in this environment. So we are taking our exposure up in portfolios, to emerging markets. There'll always be good stories and poor stories in emerging markets, and I think it's our job to help really go through that information and identify what are the stories that are improving and what are the countries that still might be going through more geopolitical or more duress.
And Scott, as a last question, what are the clients' interest with all this scenario?
Yeah, I think clients are looking for new things, right? I mean, clients, we can talk about duration and talk about credit as you mentioned. I think clients are looking for different ideas that generate consistent returns, ideas that generate uncorrelated returns to some of the traditional managers out there. We've been having a lot more conversations with clients about systematic investing. Systematic is a way to use factors, a way to use quantitative data to help pick securities. You wind up in many cases with a very consistent return stream, albeit not tremendously exciting in a lot of ways, but a return stream that has a lower correlation to traditional managers. And that's a conversation we've been having more and more with clients.
Scott DiMaggio, thank you so much for being with us at Negocios Televisión during this day. Scott DiMaggio, jefe de Renta Fija en Alliancebrestrain, le acabamos de escuchar.